Hi, this is Kerry Artek with Wicked Stocks, bringing you an individual stock pick in Murphy Oil Corporation, symbol MUR, that is recorded Wednesday, October 19th, 2022. Take a quick look at the fundamentals, courtesy of Yahoo Finance. You can see it's in the mid-cap range of $6.79 billion. You can freeze frame over this if you like, but I'm going to segue to the weekly chart. And this is a weekly chart that goes back some close to 30 years. I think the 93 is the earliest in the far left, and you can see all the activity. You can see the spike high when crude oil was at its high in 2008 and so forth and so on. This looks a lot like a crude oil chart, as you would expect. Let's take a look at a structure that's been holding highs now for the better part of 6 months or so. I think the summer high, actually 4 or 5 months. We'll zoom in here just a little bit and show a channel top. Pretty classic long-term channel top. And by long-term, I'm talking 13, 14 years in the making at 44.89 this week, dropping 6 cents a week. This is your ceiling. It's held several times now over the last 3 or 4 months. This is really kind of an update on Murphy. We did a video earlier in the year that did depict this long-term channel top as an area that can contain annual buying pressures. We had yet to test it when I put the video out. But this is kind of speaks to the fact that you can continue monitoring the location of these levels, because I'm giving you the numbers here. So, we don't really have to update you on a week-by-week basis for Murphy Oil, because you can monitor the existence, or the location rather, of this long-term price ceiling, presently at 44.89 and dropping 6 cents a week, all the way through the rest of the year. This formation will continue and remain valid on a longer-term basis. And it's basically an update or a repeat, really, of what we were saying earlier in the year. So I just wanted to sort of point that out, that even if we didn't do this video right now, you could have, by the video that we put out in the spring, have determined the exact location of this long-term price ceiling. And that we're testing it, 44.89. We're at 43.76 last price, just below it. It is an area that can contain buying through the rest of the year. And from here, I'm going to zoom in just a little bit and show you that, over the next 3 to 5 months, it's really kind of a guess, we could fall to the channel support that is presently at 25.34. So that is, that's a 30% or more price break. 40% price break from present price levels that is possible. In other words, if you're selling long-term resistance, you can hold out for long-term support. So in this scenario, you could consider buying 25 strike out of the money puts that don't expire for at least 6 months or so. We could realize 25.34 sooner than that. You can see there's precedent for that. When we sold off earlier in the summer, we broke the same distance in about inside of 2 months, 3 to 5 weeks. Is that going to happen this time? Probably not. But I think 2 to 3 months is certainly in the realm of possibility. I'm just going to call it 3 to 5 months. So a 6-month out of the money put, that 25 put, for instance, is just an idea that doesn't expire for at least 6 months. Could be something you could look at purchasing. You want something that doesn't expire inside of 3 months, for instance, because you could be correct on the directional move by buying those puts and see really nothing in return as they expire worthless, and the stock is actually approaching your strike. So you go a little further out in time, you're spending more money, but at least you're ensuring the possibility for appreciation on that put. On the way down, this is worth mentioning, a rising channel bottom is more intermediate. So this is for those traders who really are more the 2 to 3 week, 3 to 5 week traders, because from 44.89, we can quite easily fall back to the 33.98 rising channel bottom that is rising at 69 cents a week. This is all for the week of Monday, October 17th on a week-by-week basis, and we can from here fall to that area. So that's about a 20% break. I'm just doing the math in my head. I don't know exactly. Don't hold me to these numbers, but roughly a 20% break from where we presently are, maybe a little bit more. could actually be closer to 30%, 25% anyway, from 44.89 down to 33.98, rising on a steady basis. We could fill that wedge out between 33.98 and 44.89 all the way through November trade, perhaps. We could bottom out at 33.98, rally back to 44.89, and then of the two, 33.98 is the weaker and is more prone to being violated. So because of 44.89 spans some 13 years, 33.98 spans some, 13 weeks, I'm just guessing. So your 33.98 prone to violation on the way down, and if settled below, would then clearly indicate that 25.34 channel bottom within a month or two. Like I said, this could all play out within 3 to 5 weeks down to 25.34. There doesn't seem to be any fundamentals to support that right now. But you never know. That can change in a moment. But I think more in the 3 to 5 month dynamic. So over the next month or two at the most, 33.98 in reach. We could bottom out there, fill that wedge out perhaps through the rest of the year, and then closing below 33.98 should accelerate the descent to 25.34. I think I pretty much outlined that pretty well. Let's talk upside, that in the event we do close above 44.89, and because of the long-term scope of that line study, that channel top, it should be by a 1% margin or more. So closing this week, any day this week, actually, and I've said this before, because we're looking at a weekly chart, I like to lean on the weekly settlements, the Friday afternoon settlements, but it could be any day settlement above the 44.89 formation by a 1% margin. This market could be bought. If you bought the 25 strike out of the money puts and we settle at above this formation by the 1% margin, my recommendation would be to liquidate that investment, that purchase of those puts, and then go long. Long being, I can show that there's an extreme channel top that is equally, if not more valid, to 44.89. And that comes in at 58.86. Also, of course, dropping 6 cents a week. So if we close above 44.89 by a 1% margin, if you bought those 25 strike out of the money puts, liquidate those and then rotate to reverse, buying, say, 57, 58 out of the money calls that don't expire for at least, once again, 3 to 5 months. Because I think if we close above 44.89 by a 1% margin, that we do have a 3 to 5 month rally on our hand into the 58.86 area. And this, again, is, a 30% rally, essentially, from present price levels. So this is a good trade. This is, it's not a quick 2 to 3 week trade. Everything I'm showing you here is more in the 2 to 3 month, 3 to 5 month dynamic. But you can certainly, go long this market, whether it's buying the stock itself as a near-term investment, a 3 to 5 month pop to the upside into the upper 50s, or you're buying out of the money calls. That's really up to you. But if you buy those 58 strike calls, I would say at least 6 months out would be the recommendation, so you're not susceptible to theta or the time decay element. I'm going to zoom in here and show you once again that on the way up, there's a respectable channel top. So, this once again is good for the 2 to 3, 3 to 5 week dynamic. If we close above 44.89 by that 1% margin, then we're looking for a quick pop up to 50.23. And that is about a 15% move in and of itself. So for those of you who like the sort of the 2 to 3 week, 3 to 5 week play, this is a good one because we could top out at 50.23, probably would for at least a week, quite possibly a full month, and then fall back into the mid 40s again from 50.23. So, but if we were to close above 50.23, let's say we close above 44.89, we have a 2 to 3 week rally to 50.23, the market hesitates a bit, maybe for a week or two, and then proceeds to close above the 50.23 channel top, then we're truly in about a 3 to 5 week rally under that kind of a dynamic, whereby I would expect to reach that 58.86 target inside of 3 to 5 weeks of closing above 50.23. So, I'm saying a lot here. Closing above 44.89, 3 to 5 month target at 58.86, with due respect given on the way up to that 50.23 channel top. And that's good. You could actually liquidate profits there and then climb back in, so to speak, with a settlement above 50.23. That's another option. But I'll paint the big picture, and it's really kind of in your lap as to how you orchestrate the move. Once again, 5023 rising 21 cents a week. You can monitor its location over time all the way through the rest of the year. There's nothing else to say about Murphy Oil, symbol MUR, and that's all I've got. This is Kerry, and over and out.